Two psychologists spun a rigged wheel of fortune, watched it land on the number 10, then asked people what percent of African countries are in the United Nations. The average guess? 25%. Then they rigged the same wheel to land on 65. Same question. Same room full of smart people. This time the average guess jumped to 45%. Nothing about Africa changed. Only the number they saw first. And that is exactly what's happening to your portfolio right now. Right, the first number wins. That experiment was run by Daniel Kahneman and Amos Tversky back in 1974, and it revealed something brutal about the human mind. We don't judge value from scratch. We latch onto the first number we see, and everything after gets measured against it. In investing, that first number destroys more returns than any crash ever could. Let me show you exactly how. Here's the most expensive anchor of all, the price you paid. You buy a stock at $50. It drops to $30. And now something strange happens in your brain. You stop asking, is this a good business at $30? Instead you ask, when will it get back to $50 so I can break even? Draw, bought at $50, now $30. Brain asks, when back to $50? Real question ignored. But the market doesn't know you paid $50. It doesn't care. Your purchase price is a fact about your history, not a fact about the company's future. Buffett has said it plainly, the stock doesn't know you own it. So investors hold losers for years, waiting for a number that means nothing to anyone but them. And here's the flip side that's just as dangerous. You looked at Amazon years ago. It was cheap. You didn't buy. And now you can't buy, not because the business got worse, but because the price got higher. This is anchoring in reverse. You saw an early low price, you anchored to it, and now every higher price feels like a ripoff. So you wait for a dip back to a number that's never coming back. Think about the people who refused to buy Coca-Cola after Buffett did in 1988. He put in about $1 billion. Critics said he overpaid. That stake is worth over $25 billion today. The ones who anchored to Coke's cheaper price from 5 years earlier? They watched from the sidelines. Forever. But there's an even bigger anchor lurking on every stock screen you open. Look at any stock quote and you'll see two numbers screaming at you, the 52-week high and the 52-week low. These two numbers hijack your judgment instantly. A stock near its low feels safe. A stock near its high feels expensive. But both feelings are anchors, not analysis. Draw, near 52 WK low feels cheap, trap. Near 52 WK high feels expensive, trap. Consider General Electric. In the year 2000, it was the most valuable company on earth, worth around $600 billion. For the next decade, investors kept buying GE because it looked cheap compared to that old high. They anchored to $600 billion. But the business was shrinking the whole time. The old high wasn't a floor. It was a ghost. Right, a past high is not a promise. And Kodak investors made the exact same mistake, anchored to a dominant past while digital photography quietly ate the company alive, straight into bankruptcy in 2012. So if every number on the screen is an anchor, how do you actually think clearly? Here's the fix. The pros use one simple mental move: they value the business before they ever look at the price. Draw, step 1, estimate intrinsic value, step 2, then look at price, step 3, compare. Graham called it intrinsic value, what the business is actually worth based on its earnings, its assets, its future cash. You figure out your own number first. Then, and only then, you check the market price. When you do it in that order, the market price stops being an anchor and becomes what it should be, a piece of information. Sometimes it says bargain. Sometimes it says walk away. But it never gets to decide for you. That's the whole game. Not predicting the market, just refusing to let a random number set your reference point. Here's the line I want you to remember. Price is a fact. Value is a judgment. And the moment you let a price become your judgment, you've stopped investing and started guessing. Right, price is a fact. Value is a judgment. Every anchor, your purchase price, the old low you missed, the 52-week high, is just a number begging to think for you. Do the thinking yourself. This is educational content, not financial advice, so always do your own research. But do that research from value, not from the number the screen hands you. So tell me in the comments, what's a stock you refuse to sell just to get back to even? I read every one. And if this changed how you see that stock screen, subscribe. Tomorrow we're breaking down the bias that makes smart investors buy at the exact top.